Good afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm Brittany Umar. I'm going to be joined by Scott Red Dog Redler in just a minute to answer your questions live. But first, we're going to show you a quick video, gives you a sneak peek into Scott's trading world. Check this out.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50. Apple's good. You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island, went to school at SUNY Albany. As a firm, we are 5 partners and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
Where's the breakout? That is the next evolution.
Good afternoon. I'm Scott Redler, Chief Strategic Officer of T3Live.com. I'm here with Brittany Umar, my fabulous co-host, and we will be doing another Q&A forum hosted by StockTwits, answering your questions, any questions you want about what's going on in the stock market, what's going on in different sectors, certain tactics that we use in our approach. So, they've already started flowing in, so I'm going to go right over to Brittany and say, what's up?
What's up? Yeah, we do have a lot of questions coming in from you guys, but before we dive into those, we did have a bounce back today, Scott. So let's just talk about the market in general. Do you think the correction's over?
I think we have a new point of reference. We've been talking about, overbought territory, which we were about a week or two ago, and we've been pulling in pretty methodical. And then earlier this week, we actually, added a little bit of velocity to the move as we broke below 1449. So yesterday, we opened lower, and we talked about some levels of support to watch, one of them being around 1435-ish, another one around 1422 to 1426. So, it made sense after a 45 handle pull-in to try and buy some stock back. And if you do remember, 2 weeks ago, September 14th, talked about the oscillator being plus 60, screaming overbought, which is always a good sign, to take some stocks off, to sell some, into the movement to the upside, maybe even get, short for a Q trade. And when your 45 handle's lower, it makes sense if you sold into this strength, because entries and exits do matter, you could buy some back. So if you look at the chart real quickly, the S&P, you will see, first of all, tactically, starting from not even a year ago, look what this rally has done. Since October 4th, way back when, all the way to where we are as of now. Okay, lots of patterns along the way. I'm not going to get into them now. But what I want to show you is, the June 4th low. Here is that June 4th low. And as we were correcting, I just tried to talk to people. I said, look, let me just show you retracement rules. From the low to the high, okay, which was put in on September 14th, all we really pulled back was just about 25% of retracement off the highs. So from June 4th to the highs, 25% retracement. That is a shallow retracement. Sometimes you can get a 0.38% retracement. Sometimes the rally is still valid with a half or 0.50. So at this particular point, we bounced where we were supposed to bounce. I do think that, when we broke this 1449, some guys caught a little tactical short. That's actually, if you follow me in my VTF, I went from about 5-6 positions to just short the spiders that I wound up covering yesterday. And I put on 4 longs or so, and I tweeted about it around 350. I think, thank God my mom doesn't have a Twitter account because she would have been really upset if she saw me saying I'm buying some stock into this pulling on Yom Kippur in the middle of the fast. But you know what? I'm not a perfect Jew. I married an Italian wife. So the big man upstairs knows that hopefully it was, for the greater good. So either way, entries and exits matter. We did have a little bit of a shaking of the tree. We now have 1430 to trade against. As far as one more time to look at this chart, you will see here, that this is where we broke down from. So if the bears want to stay in control, which they're not in control, just like short-term movement whatsoever, they probably don't want to let, the bulls reclaim 1449 to about 1451. If we start breaking above this, you're going to see a lot of shorts that didn't cover into this little down move get squeezed, and then that whole performance chasing argument comes back into play. But for right now, a nice tactical long. I am still long 4 or 5 positions, but I'm long less than I came into today with because I'm tactically maneuvering, but I do think things are acting okay. We held the 21-day, just like we did here, just like we did here. Here was a little bit below it. So every time we've, let these moving averages catch up since the June 4th low, we've been basically rallying since, and this time wasn't much different.
And I'm seeing a little bit of conversation on the virtual trading floor, wondering if we are taking your questions there today. We are, so keep those questions coming on that side. We'll be answering you guys as well. But Scott, HL Stock was asking what search criteria one can use to find red dog reversal stocks. And actually, Study Right Side noticed one in Apple today.
Okay, well, a lot of people ask me what the red dog reversal is. I like naming something after myself. No, I'm kidding. Some people just name it. It just sounds a lot better than an outside day. It sounds a lot better than a hammer top or hammer bottom. I think it does, at least because my name's Red Dog. But what it really does is it has you, get involved in a move, a counter trend move with a plan. So typically a red dog reversal criteria happens when you've had a huge move to the upside, and instead of cost averaging into a short, it gives you a way in to a short versus a level for a potential pullback. Or, stock pulls off considerably and you didn't get caught in it, you sold right, and you actually had the wherewithal to get back involved with a plan. And it just so happens that in my favorite stock that I trade pretty much every day, we had a red dog reversal in Apple today. A stock that I know and love, I trade my whole career and could pay you if you trade it tactically. Yes, being an investor has been the right way to go for the past few years, and every sale has been a bad sale if you didn't get back in, but we trade intermediate trends, and you could have saved yourself like 20 points when it broke that 21-day moving average, and you could have made a lot of it back today tactically. So I'm going to go over the rationale.
You got it.
Well, you like Chanel, rationale, or something like that. Coors has been acting, a little iffy lately. So as far as Apple's concerned, I could really go over a lot with today's action because a lot took place, and it wasn't just up 15 points or so. There was a lot within that move that you could have identified to stay with it and really make a considerable amount of money. So to go to the chart of Apple itself, you will see that someone was in here playing with my little levels here, thinking that it could be, the midst of head and shoulders top, which you don't know yet, but I'll go over that a little bit later. What I want to show is the red dog reversal and how tactically you could have made yourself nice money. First of all, we talked about all the different entries from this earnings miss, all the way up to the highs. And then, every time you get to a milestone, they always shake the tree, especially if you came from 580 all the way to 700, that's a nice move. So, coming down to test support, not the end of the world. So with that said, remember they came out with the iPhone news, 5 million, a little worse than people thought. So it gapped down, came off the lows, but then really once it went below this area, which was 683, that's why I had 683 as my stop, and went below at that point, like the 8-day and also the 21-day was right around there. That was my stop. And I said, I'm going to get out of the way, I'm going to figure it out. And the red dog reversal gives you a way to figure it out, because from 705 all the way down to yesterday's low of 661, okay, what is that, about 45 points? First of all, whoever was in here also took out my 50-day moving average. So I'm going to put that back in, so this way I can give you the clear-cut picture. Because if you guys do remember, in Mad Money, on what's it called, on what was it? It was on Tuesday. I talked about if Apple gives way and doesn't hold this 683 area, we could see a move down to, support 1, or maybe even, the prior high here, which was 644, which also encompasses, has the 50-day, which moves up. So you never know where it's going to go. That's why you just have levels and you judge it along the way. And this was a major support. So for tactical traders, you got out here, you wanted to figure out where could you buy it. Could you buy it back here? Would you have to wait till it gets to there? So that's why the 661.20 right here, right down 661.20, that was the pivot. That's the low of this move from here. So just say you got involved in this day and you held it, into this day, like, oh my goodness, I can't believe I just held it from, 673 all the way down to 661.20. I don't like the way it closed. If it breaks 661.20, I'm going to get out of it because it could get down to the 50-day. It could retest, the 644 over there. You never know. But in order to do that, it's got to get through 661.20. So if we come back to me, that's why early on in the Twitter sphere, I'm like 661.20 is your pivot. In order to get to the 50-day, it's got to trade below. So, and also if it breaks that level, some guys who bought it wrong might get scared out. So, it would take away their stock. And also some people may be chasing and pressing the shorts because once a stock breaks a low, it could get some follow through like it did the prior few days. They're shorting it there. So once it goes below it and then comes back above it, people who are long got stopped out of their stock. They're like, oh my goodness, we just pulled in 45 points. Maybe I'm being a little bit too close to the vest where I should have given them more room. I just got out. I need to get back in. And maybe those who didn't cover their shorts, who were like, oh my goodness, I'm up 20 points in this short. It's Apple, it's oversold. Maybe I have to cover. Or people even chased today and said, oh, it's relatively weak. Futures are up. Stock is down. It's showing relative weakness. I'm going to press here. It's going lower. They tried to short there and it didn't work. So what happened was, you look at the chart, it went back below, it went below for like a second. 661.20, it didn't even give you that much pain. It went to 660.35 and then within a few minutes came back above. So your buy price was 661.20. The low here was 660.35, so literally $1 stop. So you said to yourself, I'm going to buy Apple here or around here. It could be 662, it could have been 663, depending if you didn't get involved yet, and give it to the low of the day. So $1, $2 stop. After a stock like Apple that just came in 40 points or so, it's calculated and it could work. And look what wound up happening. Now, if you go to the 5-minute chart to show you what, I tweeted about saying if this level holds, it can go higher. If this level holds, there's some commitment. So PS, again, here is where that time period happened. So it broke below it. It tried breaking below this, so they couldn't even push it below there. So here is where it was like really churny, really involved. And this is when it broke, this little downtrend from the prior afternoon, from the 2 o'clock high all the way into the low. So right around here could have been like your tier 1, and then right here, or you could have waited for this for your tier 1. Then it wound up holding higher and flagging. Okay, and this is your tier 2. So tier 1, tier 2, you had a nice move back, to test the highs of yesterday, and couldn't get through, but no big deal, right? 672 or so, whatever that was, from as low as 661. That's quite a move it's got to digest. I think at that point I tweeted, I said, Apple's got to hold above, I would say 667 to 669 in order to keep momentum in there, to show commitment to this move off the lows, and it did. So here was another ad, and then it flagged again, and PS, it went all the way up to the 680s and then consolidated all afternoon before making a little nudge into the end of the day. But all in all, here was your strategy. You bought it when it went back above 661 or 661.20 or right here. It's not a perfect science. And here's your stop, and you were able to trail and trim all the way up here with very limited pain. But it was planned, because anybody that tried to buy a falling knife on the prior day, this day, you probably weren't able to hold through yesterday. So that's why I like the Red Dog Reversal, because it's a calculated entry, 45 points from the high or so to $1 stop into a move like this. And a lot of people trade this different ways. Let me give you, for instance, there, because some people will just trade it intraday because it's a great actionable spot. Shorts trapped, longs just got out, great day trade, okay. Some people will say, you know what? This could be a swing entry. As long as it continues to act well, I'm going to trail it. Some guys just do a day and a half trade that take things overnight because there was momentum into the close, so maybe it opens up $2 or $3 and they sell it, and that's their day and a half strategy. So you have an actionable trade, you have a day-and-a-half strategy, and then you have some that might just be in it and say, I'm not getting out of this until it breaks the low of today, and they could catch a huge move like we've seen in other red dog type reversals. So that's why I love the red dog reversal, because it gives you a calculated entry. It could be used on 3 different time frames, whether you're just intraday, whether you're day +1, or as a swing/macro investor. And it just so happened that it happened in Apple today. So if you were involved, congratulations. There was nice action there today.
Couple follow-ups about Apple. Danny wants to know if you did mention the 683 level. Danny was asking if you see a head and shoulders pattern like some are seeing around the 683 area in Apple.
I think some people are going to, make a statement for that or be forward-looking, and it could. If you take the blinders off about Apple, you go back to the chart, you will see that there is potential. Everyone sees things a little bit differently, and you have the small time making of what could be a head and shoulders top. Here's your left shoulder, here's the head, right? And then here is your right shoulder. So, there's probably a little bit more room for a right shoulder to develop, I guess, okay? And, it's coming into some resistance, I think, right around, what is this, 680, this is 692. So I would say, anywhere between 687, 692, people could still make the argument that if it reverses here, puts like a little hammer top, starts heading lower, that this could be the development of a right shoulder. But then I guess in order to really resolve to the downside, it'll probably be during earnings, which will be in the next few weeks. I'm not sure of the exact date, but for right now, it was an active strategy where you could have made good money today. I guess you could make money. I'm long it overnight also, where maybe we get a gap up into that and you could sell it if you think that there's a possibility of this, and then we'll look for more data. But every time people have called for this type of pattern in Apple, it rarely triggers, through support. It usually holds it and continues. No one's made millions and millions and gazillions of dollars by, being short Apple. You've made some cute cash flow, but the real way to make a net worth or an impact on your net worth has been buying the dips here and staying long as an investor, same way on a net trading front.
And last Apple follow-up before we move on. Tommy says, if we clear 682.71 in Apple tomorrow, is it all in? Also, do you take into consideration post and pre-market?
Yeah, you could sell it pre-market. Like today, people who were long last night said, oh my goodness, Apple's down $2, the futures are up. If you sold your stock, you have to take it into consideration. You always, my rule is also like usually, like if I take 1,000 shares of Apple long overnight and it's up $4 or something like that, I usually sell half into the up $4 and then I wait to see what the first 30 to 45 minutes of composure is before I get back into a few thousand shares or whatever it is. So, pre and post market does count, because when you sell or buy in those time frames, it can either hurt you or not hurt you. So I think it's valid. Obviously, more volume is traded intraday, and that's where more emphasis is. But, the charts get built intraday, not post and pre. So maybe you shouldn't be trading pre and post hours and wait for the real bids and offers to come in. As far as that level, you go back to the chart, I think 680, what?
682.71. All
right, I put a lot of lines in here, a lot of mishmash. So I would say 682.17, right here is today's high. So through this high, I would think the next level of resistance is like 692. So above this area tomorrow, that's I would say 688 to 692 would be your playground before the bears really got to step in and and reverse it. But either way, it could be a good spot to maybe take some profits. People could look for a divergence for a trade. But here today's high is a point of reference, and then I would say this is 692. And this is 695. So that's really your next real resistance. But I know there's a point of reference in there too, around 688 that I was trading against, or 687 before we fell lower.
All right, let's answer a question off the virtual trading floor. We have B. Richardson saying, Scott, what do you think about LinkedIn here? Is this a buyable pullback? It did hold the 21-day.
I still think it's in the game. A lot of momentum names in the last 2 weeks broke their 8/21-day moving average, which doesn't mean game over. All it means is it needs more time. I think a lot of bulls, including myself, that was carrying positions, not saying we got spoiled, but it was an easy environment to the upside, or easier. So for LinkedIn, lots of times you see them come in, shake the tree because they're not ready yet. They need more time before they have a bigger platform to jump from. And if you look at LinkedIn, I started talking about this, I think right after, like few quarters ago. Meanwhile, it's been a rock star somewhat. The last real buyable area for a move to the upside was right here when it cleared just 110 and this 112. And I know I was, buying it here for another move through 125 for momentum, but sometimes there's not momentum in the market. Only, I think, 2-3 times a year do you get the playground where you get momentum, where you get stocks where you could buy high and sell them higher. For right now, the market's kind of in digestion, wait and see mode, so stocks aren't really breaking out. I would say right now, put this as like a channel. Okay, and right now this is the lower end of the channel holding the 21-day. So I think it's fine. I actually nibbled a little bit also in this. If it starts taking back, half of this wide range bar, maybe you could get, a little bit frisky for a momentum move. But for right now, it still looks great. It's still really close to, these historic highs, holding up here after an enormous move, after a nice pivot right there. So at this point, though, I just don't see many stocks jumping to 52-week highs right now. So this could take a little bit more time to work out.
All right, here's one from Market Picker, a loyal viewer. He says, I know you said Priceline has your number, but do you think it's worth watching for a trade above 645 to 650? Thanks, Scott, for everything, he says.
Oh, you're welcome. Let's take a look. Priceline has my number because I don't really believe that much in their business model. I've tried shorting it so many times, and it doesn't really work that way, and I just can't trade so many high beta, loose, high price stocks. So for this one, I tend to stay away and be a little bit more of an offensive coordinator. So I'll give you my objective opinion here. Is objective or subjective? Which one is the one with no opinions? Anyway.
Objective.
Objective. Okay, so here you go. That's why I went to Albany, not Harvard. Anyway, and that's why I have a great editorial team. So if you look right here, I would say it is wedging. Okay, this was your earnings miss. And whenever a stock after 4 or 5 sessions starts to trade within your earnings gap, it shows you that this earning gap is somewhat voidable, and there's definitely some opportunity there, and it's not in as much control, because if it would have came up to here and turned lower, and people didn't want it after this gap, they would say that that should control price. So anyway, this was a nice entry right here, another little entry there, and slowly, methodically coming higher. At this point, it's wedging. So I would say, I don't remember what price point you just said. I would say micro above 637. It could continue to the upside. If it starts to break below this price point of 617, which I know is far off, it could go back to the downside. Overall, to me, this stock is somewhat broken. Okay, you have a high, lower high, lower high. You have the gap. I think bulls took, negated a little bit of the broken nature by being able to fill a big portion of this gap. So I think, here's your wedge. Probably needs a little bit more time, but then you'll be able to jump on. If the market decides that 1449 is not going to be the high and we're going to go to new highs, I bet your Priceline goes with it. If we reject 1449 and go back to test 1430 on the S&P, chances are it could go this way. So watch this wedge develop and know which way it resolves. And I just take it a little less size in Priceline, because it's not that easy to handle, at least for me.
All right, we're going to give Red Dog a little break here. We're going to take a quick commercial break, and we'll be joined by Evan Lazarus to answer your questions, so keep them coming.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
Welcome back. We're answering your questions live. This time I'm joined by Evan Lazarus. Welcome, Laz.
Thanks for having me again.
Let's talk Facebook. Jay Loser says Facebook broke again today. Is it toast for a while?
Toast? That's a good question. I don't know if I'd use the word toast. The stock is off 50% from its IPO. I think it's a little late to call it toast. I think, the bleeding here has been consistent. We've seen, at this point, we've seen now 2 bounces. We can take a look at Facebook. The one bounce here off the 25 to, the low to mid 30s, which, got sold pretty aggressively, taking us down to the $17 mark, where, we saw this, nice bounce off the $17, $18 area back to about 23. Barron's came out with that article last weekend, Immediately under, the stock just took a haircut. So what I was saying here is that I thought Facebook would maybe potentially give one more rally leg. I thought, this pull we would pull back and then possibly see one more push, to get into this area and maybe even remotely fill that gap. Well, that gap down, essentially has changed everything. I don't know that the stock is going to make new lows here. I think more time would give us that information. The 8 is now back to down. We did see it try and snap back today, and again, some more selling ensued. That being said, shorting down here, probably I would be a little hands off. This is a very tricky trade. I think with more time, whenever you feel like, or whenever I feel like I don't really have a handle on what potentially could happen next, I wait. Because as a trader, time has to be your friend. Time will provide you with more evidence, and that evidence will ultimately lead you to come up with a bullish conclusion or potentially a bearish conclusion. Our averages, our 21's flattened out, our 8 is still down below the 50. It's not the healthiest stock on the board. I mean, you think about where the market is, what the market has done. It doesn't have the relative strength component. That being said, it could change on any given day, like it did this past weekend with a Barron story. So, is it a buy? Probably not right now. Is it a short? Again, I'm going to go with that. Not right now. I would say probably best to avoid it altogether. That's my honest opinion. It could come back and test these lows again, in which case, it could become buyable off the lows. There's a number of scenarios you could probably play out here. I don't see any good chart patterns. I don't see any great setups. I don't see a whole lot of enthusiasm. Probably best to just let it be.
All right, well, you just gave us a little peek into your strategy there, but Bob wants to know a little bit more. He says, on a gap up on the open, I find it hard to get in, feels like chasing. When do you know when to buy intraday?
Well, there's different gap strategies. It's a good question. If a stock gaps up, it depends on the type of gap. Is it an extreme gap where it changes? When I say extreme, it changes the dynamic of the chart. So Scott, in the previous segment, talked about price line. This is what we call an extreme gap. This is something that dramatically changes the structure and moves the stock or shifts the stock into a whole separate, trading region. You can see, as an example of some type of a gap. Then there's other gaps that are, smaller. They don't really shift the structure of the chart, but are, best left as day trades, if you will. So if there's a gap up, and I'm trying to think of a good example, and you feel like you're going to chase something, probably best to wait it out. I find that gap ups that don't fill in the first 45 minutes to hour of the day generally are prime candidates for the potential to go higher. I think actually the S&Ps today, if I'm not mistaken, we can take a look here. The S&Ps did gap up. You can see the gap up here. We did attempt to pull back. The gap was not filled, this open gap from this morning. And you can see, at some point later in the day when we took out highs, this is the spider chart, you can see that trade ensued. So again, I'm going to go back to what I said earlier about time. Time as a trader is your friend. And even if it's a simple strategy where you want to buy a gap up, a stock gaps up or gaps down, and you feel like you're chasing, you don't want to buy the open, give it a good 45 minutes to hour to build some sort of setup. When I say setup, some sort of channel like this that, ultimately breaks out of the high a day, or there's obviously other types of strategies. There's the 13-minute buy setup, which I personally, like to trade, where a stock, might rally in the first 30, 45 minutes and give you a pullback on a 13-minute chart. Again, this is all taught in the active trader curriculum, but there are different strategies for which you can buy gap ups and short, gap downs on certain day trades. So there are great strategies out there. You just have to understand how they work.
While we're on strategy, Market Picker says when you put on a trade initially for a day trade, what do you look at that lets you turn it into an overnight hold or swing position, etc.?
Well, generally, if a stock is a day trade, and I set my course as this is going to be a day trade, it generally doesn't become a swing trade. Very rarely do I tell traders that buy a stock, look for a day trade, meaning you're going to get out of that stock intraday, and then hold it and have it become something more. I think good trading is all about a plan, and if your plan is to day trade, then stay with your plan. I find that more times than not, when you kind of get away from your plan, it can cause havoc. And I've seen it happen a lot with traders where they get into a trade, a day trade, they set the course, and then all of a sudden, they're in the money. Now that's an investment. Now it's, they're in this for 10 days. And usually when you start to do that, it can create, more problems than upside. So I think initially my advice is stay with your plan. If it's a day trade, stay with a day trade. If I'm going to swing trade, I'm operating off of higher time frames. I'm going to buy and sell based off of, what the daily charts are telling me, the larger time periods. If I'm day trading, I'm staying with my 5-minute charts and my 13-minute charts. Those are my day trading time frames. I swear by them. And generally, if it's a day trade and I'm buying or selling a security off of those time frames, I'm not going to take it home overnight. If I'm going to take it home overnight, my entry and my exit strategies will be based off of, candlesticks and or patterns on daily or hourly charts. So don't confuse your time frames. Really, really important piece of advice. If you're going to day trade, stay in the execution time frames, 5 and 13. If you're going to swing trade, focus on, higher time frames. You can use the smaller time frames to get best execution, but that's a learned skill, and that takes a little bit of time to figure out. I think Scott does a great job of that. He knows what's happening on the higher time frames. He's looking at areas, but he's using his 5 and 13-minute charts to then get best execution. So being a little long-winded here, if I can just recap, try and stay with your time frame. Don't let a day trade become something more than a day trade. Don't let a swing trade become something more than a swing trade. Stay within your time frames from which you buy and sell securities.
Okay, we've gotten a bunch of questions for you on Discover, DFS. Wait Long is asking just your general thoughts on the stock, while Samit has a very specific question. You might want to pull up the chart. He says, if you bought the dip around 37, 38, would you add through the highs to go to tier 2 as a swing or longer term investor?
Discover's not it's not really a stock that I track actively. But I can take a look from a charting perspective. Let's take a look. And I always start macro. I always look at weeklies because weeklies give me a real sense of trend. I can see where the stock has come from, what it's done, what the breakout levels were. I can see what the moving averages are doing. And this stock is hugging the 8. This is a good looking chart. Now it's a little long-winded. You're not buying down here into on the pullback. You're buying at highs. So I strongly caution, buying at highs. But you've had a nice, 6 weeks of basing action up here. And the daily chart, we got that enthusiastic move today to the upside. Do I love it being a buyer here? No, I'd probably wait. If I'm trying to really mitigate risk, I would probably wait for a 2 to 3 day consolidation, maybe a little basing here at the highs. Give it a little flag pattern, and then potentially you could get that next leg up. I do strongly caution always chasing price. You don't want to chase price. It doesn't make anybody any money. You just tack on a lot more risk. The chart looks great. The stock looks like it could potentially go higher. Use your daily chart. Wait for a nice bullish structure, bull flag setup. Let these averages catch up a little bit. The stock's had a big move over the last 2 days. So probably caught a lot of traders by surprise as it broke down, yesterday, only to then rally back. So a lot of short covering in here. A lot of people probably caught off guard. Give it a couple days to set back up to base, and you could find yourself a nice trade.
Okay, here's one from Evergreen asking if the GDX and gold look bullish to you.
Well, gold's had a big move. We can look at GLD. I'll throw it up here. Gold's basing. I think it's had a nice big move off the lows. I know Scott had talked about this, basing pattern that the GLDs was in for a few months. We got that nice break. Little extended here. It's had a nice run. Could it go higher? It definitely could go higher. It did, we did see a price high the other day, caused a little bit of selling, right back up into it. Let's see what happens over the next couple of days. I think with a little more time, I'd like to see a larger base build here, maybe in a few more weeks. Again, let's go to that weekly. Right, you've had that, 5 or 6 weeks of up move. Give this a couple weeks to base here on the weekly. You've got some resistance up here. You can see it on the weekly chart. A couple of, like I said, a few weeks of some good healthy basing could provide another breakout through this resistance level. That's certainly in the cards. I think it's just time.
All right.
Oh, and GDX. I forgot the GDX, the miners.
That's true.
GDX, same thing. It's had a nice move off the lows. I really strongly caution buying highs. Give it a chance. Buy a pullback. Wait for these averages to catch up. Again, I'm using weekly charts only because they provide the clarity that I like to see. and then you could time in on a smaller time frame. Little choppy in here. Got a nice pullback. We saw some buying off that pullback. I still think it needs more time, a little bit longer of a base.
Okay, it's time for another quick commercial break. We're going to let Laz go. We'll be back with Red Dog in just a minute. Keep the questions coming.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The two-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
We're back answering your questions live and back with Red Dog again. Welcome back again.
Thanks. It's just good to see you again. I guess twice in a night.
It's been so long. Speaking of so long, Wait Long has a question. He says, do you think the push higher today could have had something to do with it being the end of the quarter?
It's always got something to do with something. Well, anyway, that was one of the reasons why yesterday I put on positions again, because I'm like, you know what? September's been a strong month, and why would they just let it all fall apart, you know, going into the last week? So a lot of people have said it had to do with Spain's budget. Some people said it had to do with, you know, obviously end of the month, window dressing. No matter what it is, you just have to learn how to maneuver and learn the system. You know, after coming 45 handles off the highs into 1430 with the potential of them marking things up into tomorrow, you know, all it could have been is a great trade if you were long, if you covered your shorts, if you maneuvered. So at this particular point, right now, it's the market's going to have to prove, or the bulls are going to have to prove that the motion to the upside can continue, or the bears are going to have to really block off that line in the sand, which I'll go to one more time. So if you go to the chart here, you will see, I think if the bears have any hopes of, you know, of keeping, you know, this, you know, pressure on, which they probably, one loss right here was taking away yesterday's high. You know, if the bears wanted like really to put pressure on, they wouldn't have let the S&P get above 1441. So, you know, by letting it get across this high and squeezing right there, you know, the last little line of defense was this upper floor, which comes in right here. So you have 1449, which is a level that I've talked about many times, and then you have, you know, 1452, and we were as high as almost 1450 today. So I would say if the bears want to like put in a lower high, so to speak, where, you know, here is, you know, one of them, you know, maybe you push through and you fail, and then perhaps we continue to go sideways, and then we'll be able to, you know, watch this 1430 level. But for now, you know, I'd say today was constructive for the short-term bulls, and overall on a macro level, again, never violated any retracement rules from the June 4th low. You want to go even further macro, you know, look where we've come from since not even a year ago on October 4th. So everyone's looking for a reason for this market to sell off, but I'm always looking for a reason for a great pattern to buy, because that's what the trend has been. And if you want to just, you know, be like a sixth grader, who's smarter than a sixth grader, there's your ruler, and we're still following it. You know, so a sixth grader with a ruler could follow this trend a little bit better than those trying to risk manage themselves away from what has been a very, you know, fruitful rally.
Let's take another question off the virtual trading floor. We've got one from Big Brown saying, how do we determine what percentage of the spiders we put on as a hedge? And we've actually got some conversation going in about this. Tom P is chiming in and saying it really depends on a lot of factors like the beta of your stocks and how much risk and exposure you want to have. So you want to weigh in on that?
Yeah, because I've been asked that question. I do it a little bit with a feel. You know, I don't do it as a calculated system, and I know I probably should. And when, you know, if you manage like $100 million or $200 million, there's algos for it, where if you're like, you know, 70% long, what your hedge should be, your percentage of this or that. I typically go, you know what, after, like yesterday, I came in all long, because I said, you know what, I don't want to be hedged. We just pulled in 45 handles. I'm going to go long those 4 positions you saw on the virtual trade floor. I think it was Apple, Spiders, LVS, and Goldman. You know, but then today I was kind of like, you know what, we had a big day. Maybe I should, you know, if I have 3, 4, 5 longs on, I should have a short, but I still think this direction continue a little bit more. So, you know, but when you saw in August, when I was holding 7 to 15 positions, then I was short spiders because if we opened down, I wanted to be able to cover the spiders, and if we opened up, short more, sell some stocks. And then remember also when we hit 1474 and the oscillator was screaming at plus 60, I was like, I'm adding to my overlays on my hedges, where I would short spiders pretty much, a lot of the move in September. But I also had 8, 9 longs where it didn't matter. So I lost a little bit trading around the spider short, but I made a lot in the positions I was holding. So that's when I said, you know what, I'm going to connect all the dots where we're overbought, we're at the top end of the range, everyone's getting excited. I'm going to take the spiders that I've been holding and get to tier 2 or tier 3 versus sitting in tier 1 and trading around it. So it all depends on where we are in the chart. It all depends on how much money in your portfolio you're managing. For me, I don't need to have a calculated system yet. I use the ranges of the market and more of a feel. But I would say, if you're holding, I would, it could be like 80-20. I like to be directional. There are a lot of guys on Twitter like 7 longs, 7 shorts. That's too complicated to make money. I like to be directional, and when the direction gets a little long in the tooth, then I add to more of the hedge so I can make some money on a little bit of the downside. But I like to stick with the trend and not be hedging my way out of a good momentum trade because I try to be too cute.
And Stock Chatter wants to know your thoughts on Google right now.
Google. What was Google my high beta stock tech of the year? I don't know. I've never mentioned it. I don't know. I've never beaten my chest on that one. But anyway, it doesn't, whatever. Stock has been acting really strong. And for a while, it was, moving with Apple. It was Apple, Google. And then lately, Google got a lot stronger when Apple had to pull in because they were saying the supply constraints was a positive for Google because if people can get the iPhone, they're in the store, they're lazy, like, let me just get the Android. Anyway, technically since last quarter's earnings, stock has acted awesome. You could have bought it at 625, you could have bought it at 645. Remember that pull into the 21-day where not Hesh, that's my best friend, Sperling, who's another good friend, was banging the computer because he started buying too early. We bought into 681 before screaming, to, what did it get as high as? Almost 760. So at this point, I think it needs time. Time to digest, time to let the moving averages catching up. Doesn't mean it's a short. Can you make cute money short? Maybe. But sometimes if it's not a long, it doesn't mean it's a short. We've talked about that many times. Go to the chart real quickly on Google. Lots of calculated buys. This being probably the best one right here when it broke this downtrend that was in place from March after earnings. So earnings risk was out of the way, hovered, and triggered right there. Buy. This was really your buy. You don't have to hold into this. You could have missed a little bit off of this major support and been fine buying it here. You still made for yourself potentially 130 points in not that long of a time period. Next area was when it cleared 52-week highs. One of my rules is a stock that clears 52-week highs typically trades in that direction because that's how strong it is. Traded above it, held around it, and then kept going. So you could have been a buyer above this thing also, which was about, 663-ish. Okay, and then another buy, which is the one that I was saying when Sperling broke his keyboard, was probably right around here because he started too early. I think he started on this day, and then this is when we tweeted tactically saying, 681, 682, blah, blah, blah. Here's your last buy, and then a momentum buy was right here. So there you go. At this particular point, it is flagging. It's still above the 8-day. It's letting it catch up. It looks really strong. The funny thing is, from not here, not here, not here. Up here is where everyone's upping their price targets, all the wirehouses, which just makes me laugh. But anyway, you have some predefined resistance. I would love to see it go sideways a little bit longer in here so then we can get a meteor momentum trade through 762 to 765 for what could be a move to 800, 8.25.
Here's one from Me Here Next Money saying, can you give me more details on your swing trader course?
What was that?
Me Here Next Money.
That's a long one.
It is. It's a mouthful. He says, can you give me more details on your swing trader course you're starting?
Oh, so I got to do a shameless plug of my swing trader course?
You were asked to do one.
All right. So anyway, the swing trader course that just went online this week is a course that really tries to put together my last 15 years in the stock market as a market participant. I've been approaching the market in a different way, evolving every step of the way, using my experience from the .com crash to 9/11 to the 2003 move up to the financial meltdown. I've seen it all at this particular point. So what I wanted to do is try and put all my experience with the help of some other contributors in one course to show you why I do certain things. Why do I think red dog reversal is a swing trade? Why do I like gap ups that hold and have pent up momentum for further upside? Why do I use the 8 and the 21, or why as a swing trader you should use the 50 and the 100? Basically just trying to put together a course for you to take so you can understand the principles of what I've learned for swing trading. It's not like the elementary swing trading course where if you go to, maybe IBD or something like that, it has a little bit of my personality, which sometimes is good, sometimes bad. And I really just try and add as much value so you could watch it and learn from it. And it's really more for someone that's not a market professional that's sitting there hitting their keyboard all day long. It's more for someone that has another job, but it's looking to maneuver the market with the macro ranges 5-6 times a year, or some people could do it also 4 or 5 times a month versus 20 times in a day. So it's more of a gradual type of approach where you put bracket orders where you buy it for a reason, you put in a stop, and as long as it continues to go up in the direction or down in the direction for a reason, you stay with it, and hopefully the tactics in there will help you add cash flow to your existing job, to your financial situation, and not take cash flow away. I try and pride myself as a consistent singles and doubles hitter, and lots of times, if I would have just stuck around and let it go for bigger moves, I would make more money. So I'm trying to evolve into more of a swing trader with an active approach as well, which is what I want to do in this course, is give a little bit of a longer term horizon, but using a tier system, to maximize some moves. But if you don't want to maximize those moves along the way, like they're saying that Google range, which you could have been in for a swing trade and never really maneuvered it and just held a certain amount, you can make money with the market, identifying the best acting stocks out there to go along with the trend. And we try and put that all in a course. And then what we also do is 4 times a month on Tuesdays between I think 4:30 and 5:15, I'll answer some questions about the course. I'll go into a mentoring room. You'll say, okay, I have a question about this slide. What does it mean? Could you give me an example? And I'll try and teach you or explain what you also already watched or saw in your big booklet, in the course. And then I might even, if you're lucky, throw a few swing trades in there that I'm looking at, where we could talk about it. But mainly the mentoring room is to answer your questions on why, I put a certain thing in the manual to help explain it. The virtual trading floor is where I go over ideas all day long, and I'm going to be live every day for those who are in the virtual trade floor. So I do suggest that if you're going to take the swing trading course, you might as well be a member of the virtual trade floor, but that's a whole different story. But as far as the swing trading course, we worked very hard on it. We're very proud of it. It's going to be a work in progress. We're probably going to add some more hours of content as we see fit. And hopefully, if we just did a 50% off sale, going into the release of it, and at this point it's on the website. You see the amount of money it is, and I know it seems like a lot, but one trade, even like today, if you learn the red dog reversal tactic from the swing trading course, you could have seen it in an Apple, and it could have paid for a lot more than just educating yourself with 15 years of my experience.
All right, well, that is all the time we have for tonight. Hopefully we helped you guys out. Meet us right here next Thursday for another StockTwits Q&A session, and have a great night.